The financial sector cleanup undertaken by the Akufo-Addo administration in August 2017 has led to the collapse of 9 universal banks, 347 microfinance companies, 39 microcredit companies or money lenders, 15 savings and loan companies, 8 finance house companies, and 2 non-bank financial institutions. The finance minister, Ken Ofori-Atta, had earlier indicated that the banking sector reforms undertaken by government in 2017 and 2018 strengthened local banks and made them more resilient to shocks. Assessing the balance sheets of local banks currently, the finance minister argued that the financial health of Ghanaian-owned banks was stronger when compared to the period before the cleanup exercise. Mr. Ofori-Atta, who made the assertions in a post-media budget interview on City TV's Current Affairs show, The Point of View, suggested it was better to have fewer local banks with a strong financial capacity than having many weak local banks unable to drive economic development through lending. Corroborating the finance minister's point is the fact that Ghanaians are reviving their confidence in the banking sector following the financial sector cleanup. This is evident in the deposits recorded by commercial banks for the period ending October 2019. According to the regulator, deposits, which is a major source of funding for banks, grew by 17.1% for the period under review, albeit marginally lower than the 20.7% recorded in the preceding year. Total deposits increased by 11.51 billion Ghana cedis from 67.38 billion cedis to 78.9 billion cedis in October 2019. However, there have been some setbacks with the exercise, as not all customers of the various now defunct financial institutions have been paid their monies. A former finance minister, Seth Terkper, believes the Akufo-Addo administration has no excuse for not paying customers because of the opportunities afforded by the Energy Sector Levy Act ESLA Fund. According to him, the Energy Sector Levy was expected to generate 28 billion Ghana cedis by 2022. He argued that this could be used to pay their aggrieved customers in line with the promise by President Akufo-Addo. However, General Manager Microfinance GN Bank, Kofi Asamoah-Sian, believes government could have been measured in its approach with the cleaning up of the financial sector.
One thing we shouldn't also do that will send wrong signals to investors is the situation where successive government repudiates predecessor government's contract, and that doesn't engender confidence in the economy, in the country, by foreign investors, and so on and so forth. So we should be able to have predictability in doing transactions with government, that government will respect the sanctity of contract, either executed by themselves or by their predecessor government, because it is expected, in my view, that members of the current administration will expect that post their term, any new government will be, should be, and must be in a position to respect the contract that they currently execute. Now, if you have a situation where, for whatever reasons, contracts get repudiated and not respected and so on, it creates uncertainty in the market, and you will not have the entrepreneurs to be bold and confident enough to invest in areas that are important. And the most important thing is that the benefit to the communities where the schools were built, the bridges were built, the roads were done, and so on and so forth, must not be overlooked in our haste or desire to get rid of so-called financial institutions that were not regulatory compliant. So we should be measured in our actions against these institutions going forward. And I think the country will benefit as far as its economic growth efforts are concerned.
Hi guys, I hope you enjoyed this video. Subscribe to our City TV YouTube channel for more videos on the Business Dashboard.
Tune in and stay updated on the key business news stories of the day with Business Dashboard every weekday at 7 p.m. only on City TV.